Happy Friday. Welcome to Fat Bear Pod, where we navigate the blockchain jungle every day. I'm your host, PB. First up, Bitcoin's out here climbing to just shy of that 96K mark. The total crypto market cap's up 2.4% to 2.99 trillion. That's right, we're knocking on the door of 3T. Trading volume's also feeling itself, jumping 3.5% to 101 billion in the last 24 hours. Bitcoin dominance is holding steady at 63.5%. No surprise there. Fear and greed index? Yawn. It's chilling at 52, same as yesterday. Neutral vibes. For alt performance, the winners are Nitia, Ardor, Pudgy Penguins, and Virtual's Protocol. The losers are Polygon, MemeFi, Zora, and Alchemist AI. Crypto market is pumping, but the macro sentiment is a buzzkill. U.S. consumer sentiment is still moping around like a trader who bought the top in 2021. The University of Michigan's final consumer sentiment index for April clocked in at 54.8, barely up from a preliminary 50.8 earlier this month. That's the lowest since the COVID days, back when we were all panic buying toilet paper and hoping Zoom calls were the future. Why the gloom? Two words: tariffs and inflation. President Trump's been playing tariff roulette, slapping a whopping 145% on Chinese goods. Beijing clapped back with 125% tariffs of their own, and now everyone's freaking out about prices spiking and the economy hitting a wall. Consumers are expecting inflation to hit 5.3% over the next year, down a smidge from 6.7% earlier in April, but still the highest since the 80s. Long-term inflation expectations are at 4.4%, which is basically code for we're all screwed. Economists are clutching their pearls, saying this could be self-fulfilling, like if everyone thinks prices are the moon, they'll hoard goods and boom, inflation moons anyway. Meanwhile, the Federal Reserve's sitting there with its 4.25 to 4.5% interest rates, pretending it's got this under control. Spoiler, they don't. Inflation expectations ain't the most exciting thing in the world. But our crypto news got something that may pique your interest. Pokémon, the biggest media franchise on the planet, could be hopping onto the Sway blockchain. Sway native token is up 63% in 4 days, and it's not because of some fancy DeFi protocol or a new yield farm. Nah, it's all about a rumor that started when Pokémon Home, their mobile app for trading and storing your digital critters, dropped a privacy policy update. That update name-dropped a new developer, Parasol Technologies. Parasol was acquired by Misson Labs in March 2025, the folks behind Sway. Now let's talk impact. If Pokémon does go Web3 with Sway, it's a game changer. Pokémon's got 30 million monthly players and billions in revenue. Pokémon Go alone prints money like a central bank. A blockchain integration could onboard millions of normies into crypto, especially if they're minting Pikachu NFTs or battling in a play-to-earn game. Sway's already got a rep for fast transactions and gaming-friendly tech, so it's not a bad fit. But here's the flip side. Pokémon fans are rabid and not the fun kind. If this turns out to be a cash grab or a buggy NFT drop, the backlash will be louder than a Snorlax snore. Next story. Roger Ver, the guy who was handing out Bitcoin like candy in Silicon Valley back when it was worth pennies, is in deep with Uncle Sam. The feds hit him with an 8-count indictment for mail fraud, tax evasion, and filing false returns, claiming he dodged $48 million in taxes on $240 million in Bitcoin sales back in 2017. They say he had 131,000 BTC and lowballed the value of 2 companies when he ditched his U.S. citizenship in 2014. Talk about an exit tax gone wrong. Ver got nabbed in Spain, posted 150,000 euro bail, and now he's fighting extradition while reporting to Spanish cops like it's a part-time job. Facing a potential 100-year sentence, my man's pulling out all the stops, and that's where Roger Stone, Trump's longtime dirty trickster, comes in. Ver's dropping 600 grand for Stone to lobby Congress and sprinkle some of that Trump-era magic on his case. Stone's job? Push to nix the exit tax law Ver's accused of breaking, and maybe whisper in some GOP ears for political cover. Now, Stone's no stranger to legal hot water. He got pardoned by Trump in 2020 after conviction for witness tampering and obstruction. So he's got that been there, done that energy for his banking on. $600,000 for 2 months of lobbying is a hell of a flex for a guy who's not even asking for a direct Trump pardon. Last crypto story. Maximilian Crown, co-founder of MoonPay, is taking the helm at the Ton Foundation, just as the crypto market's pumping like it's 2021. This ain't some random suit. Crown was the CFO and COO at MoonPay, scaling it into a crypto payments juggernaut that's basically the PayPal of Web3. He cut deals with banks, built infrastructure, and navigated regulatory landmines that would have sunk lesser startups. The Ton Foundation statement is that Crown brings a wealth of experience, which is corporate speak for this dude's got connections and knows how to hustle. Why is this a big deal? Ton, aka the Open Network, is Telegram's blockchain love child with 800 million users in its orbit. It's got speed, scalability, and a direct line to Telegram's massive user base. Think mini games and wallets baked right into the app. But lately, Ton's been stumbling. Daily fees and transaction volumes tanked after Telegram-based games like Hamster Combat lost steam. Crown stepping in at a pivotal moment. With $400 million in VC cash from heavyweights like Sequoia and Ribbit burning a hole in Ton's pocket. His mission? Turn Ton into a blockchain powerhouse, onboard millions of Telegram normies, and maybe make Toncoin more than just another altcoin bleeding in a bear market. Now it's time to milk the hot DeFi stories of the day. MilkyWay, the self-proclaimed first and largest modular liquid staking protocol on Celestia, is dropping 10% of its milk token supply in what they're calling the Massdrop. They're hyping it as a big thank you to their milkers, which sounds like a community that loves to get milked. Since launching in December 2023, they've racked up $182.7 million in TVL, with $80 million in re-staking TVL, making them a big fish in Celestia's pond. This drop's targeting 3 groups: endpoint holders with at least 500 endpoints, militia NFT holders, and MilkInit testers who've been grinding in Itia testnet. And if you hold milk cartons, you get a 1.25x boost to your endpoints. The numbers sound juicy. 10% of the supply is on par with most projects, and MilkyWay's got cred with a $5 million seed round from Polychain, Binance Labs, and Crypto.com capital back in 2024. They're also flexing 50-plus partners, including Initia, pushing that interwoven roll-ups narrative. The milk token isn't just for show. It's got governance powers and a 10% cut of milk tia staking fees, kind of like CRV in Curve Finance. You can claim your drop on exchanges like MEXC, Gate, or KuCoin if you opt in by tomorrow, April 26. Next story. mETH Protocol, the liquid staking arm of Mantle, is teaming up with the MI4 Fund, a fancy new investment vehicle that's blending crypto with traditional finance. The MI4 Fund, already packing liquid staking tokens like Mantle's Meta, Bybit's BB Sol, and Athena's USDE, is now officially onboarding mETH to juice its yield game. mETH is delivering a 3.78% APR, not too shabby for a safe yield in crypto. The fund's a hybrid, part market cap weighted portfolio of top crypto assets, part DeFi yield machine, and it's got securitized and mana behind it, trying to make blockchain less scary for the Wall Street crowd. Institutional interest in crypto has been spiking, with billions flowing into tokenized funds, and MI4 is positioning itself as the S&P 500 of crypto. Institutional money sounds great, but it's a double-edged sword. More suits in crypto means more stability, sure, but also more control. Kind of defeats the whole decentralized freedom vibe we've been shilling since Bitcoin's white paper. Institutions might love yield, but if the economy tanks, they'll dump crypto faster than a whale unloading a shitcoin. And let's not forget the fine print. Funds like MI4 often come with lockups, fees, and KYC so invasive it'll make you miss the wild west days of crypto. Last DeFi story. HALO launched a new digital dollar project on Hyper EVM. HALO USD is a stablecoin pegged to the US dollar, tied to the HALO network. The HALO network's been cooking with decentralized Oracle machine, supporting on-chain and off-chain price aggregation. Think quartile price, average price, TWAP, the the works. HALO USD aims to leverage this tech to provide a stable, cross-chain intermediate solution for DeFi apps, dApps, and even TradFi players looking to dip their toes into blockchain without getting rug pulled. Stablecoins are the lifeblood of DeFi, used for trading, collateral, and dodging crypto's wild volatility. HALO USD is pitching itself as a secure, efficient option backed by HALO Network. It's also tapping into Hyper EVM's developer-friendly ecosystem, which lets folks build apps, issue tokens, and play in DeFi without breaking a sweat. HALO's infrastructure is legit. Think HALO Oracle and cross-chain systems that make blockchain data exchange smoother than a freshly minted NFT. Plus, with Hyperliquid's rep for high-speed trading, HALO USD could be a go-to for degens on Hyper EVM. For our airdrop guide, Mitosis is a hot topic of the day. Mitosis just rolled out their Yapper Reward program through a partnership with Kaido. Mitosis is all about tokenizing liquidity positions. Think staking or lending your assets, getting a tokenized version, and then using that token to farm more rewards across their ecosystem. The Yapper Rewards are part of their community push, rewarding users who stake Kaido tokens and yap about Mitosis on X. Basically, they're paying you to shill. What's the play? If you're a degen who loves to yap, stake some Kaido, tweet your heart out, and claim your rewards on Kaido later. It's low-risk, high-vibe fun. If Mitosis's ecosystem grows, those tokens might be worth something significant down the line. But don't expect to retire off this. Reward programs pay well, but not that well. The real winners are usually the projects getting free marketing. That's a wrap for this Friday's episode. Keep your keys safe and your shills locked down. Peace out.